Taxes for Americans living abroad. I'm going to focus on Mexico and Spain because that's where we have a lot of clients, but this can be similar or similar issues if you're an American living in other countries as well. One thing to note, the US is one of only two countries that taxes you on income no matter where you live. So you could spend no time in the US and you still are going to file a US tax return. Worldwide income, if you earn it somewhere else, doesn't matter. You're filing taxes on it. So when you're living abroad, you're dealing with two tax returns. You have to play them off each other. Something that saves your taxes in the US may have no impact where you live, where you're filing taxes as well. So those are both to consider. What can help you avoid double taxation? And this is the case for Mexico and Spain. It's not for all countries, but there is a foreign earned income exclusion. So income you earn in Mexico, Spain, or a lot of other countries, you get to exclude that from your US tax return up to in 2026 about 133,000. It doesn't include it covers wages and self-employment. It does not include self-employment taxes, does not include investment or rental income. And if you're going to exclude it, it means you're living abroad. You need to have 330 days abroad. You're really not half-time or part-time foreign if you're trying to get this exclusion. The foreign tax credit. So this just means any taxes you're paying in Mexico, Spain, or lots of other countries, you get a credit for that in the US so that you're not double taxing. So you don't have to pay twice on the same money. Here we go. Here are some forms, tax forms that you might have to deal with. The FBAR, if you have more than 10,000 combined in foreign accounts, you got to report it. And there's a big penalty, 50% of the balance, if you're hiding that and not reporting that. If there's no tax on it, well, I mean, there could be, we'll talk about that later, but there's no tax in just reporting, hey, I have so much money in a foreign account. There are some for income, investment income, if you're overseas, if you're living overseas, then you have a pretty high limit of how much you can make and get that exempt. It's a lot lower. I think it's like 75,000 if you're a US resident, you're not a foreign resident, and you have foreign income. And yeah, you might have to file them both. If you have a lot of money in foreign accounts and they're earning a bit of interest, might be something you're filing and paying taxes on. Investment income, yeah. The foreign tax credit doesn't apply to this. And then self-employment tax, you're not, yeah, this doesn't help with Mexico, but you could be getting double taxed depending on where you are on that self-employment income. Are you a tax resident? In Spain, they care about the calendar. 183 days a year in Spain, and you are a tax resident. You file Spanish taxes. And if you're trying to become a Spanish and an EU resident, you will be over there more than half the year. In Mexico, it's where you've established your permanent home, your center of vital interest. So even if you're less than 50% of the time, if that's your one home, where your activities are at, they count Mexico as you're a tax resident and you have to file Mexican taxes there. Spain, the rates are higher. There is some differences in different regions, and they go up faster. You're very quickly in 30%, very quickly up into the 45% range. So you're above US top ranges and very quickly. There is a Beckham Law, but this is for foreign sourced income. It's not for your Social Security, your investment income, that you're generating in the US, your pension. It's for foreign income, and you can qualify for just a 24% rate if it applies to you. In Mexico, the rates are a little lower. The top rate's a little lower, but you get there quickly. This is about, what is that? 50, I had this out. 5,051, 5.1 million at current exchange is about $300,000, let's say, and you're at their top rate. You quickly, in 30%, you're at the 30% rate at about $40,000. So you go up a lot quicker. Most of our clients, if they're filing Mexico and US, Mexico's almost double. I mean, of course, it depends on your income. But yeah, it can go up quite quickly. Um, and then most goods and services, you're getting a tax as well. Okay, let me go forward. Top rates, 37% for the US. Spain can get up there pretty high. They have a regional tax as well. Mexico, 35%. It looks lower, but it gets there a lot quicker. So your overall taxes for most middle income people may end up being higher in Mexico. Again, you're not double paying. If you're paying in Mexico, you get to credit that towards your US tax bill. The rental trap. Um, yeah, enforcement's the big issue with this, but you're paying a tax if you're doing the Airbnb, the furnished short-term rentals, 16% you're paying. You are you need to file Mexican taxes on Mexican property rentals or rental properties. You do get an exemption of 35%, but then the rest you're taxed at income. And if you're a non-resident and you're a foreigner owning, you're just going to get a flat withholding on the gross rent. Your Roth might not be safe. So Spain, I guess it's unsettled, but you have this tax exempt account. You may have even done IRA, these Roth conversions, moving money into your Roths from tax deferred account and paid taxes on it. Then you pull it out in Spain, maybe putting a tax on it. And usually Spain and Mexico are the controlling tax rates. So US taxes are usually under it. So getting a little exemption from US taxes generally doesn't help you. Mexico, I mean, right now, they're not, most people in Mexico, if they have foreign income, a lot are not filing. I things look like they're changing and the country may be getting a bit more strict about that. But that could be a tax planning strategy too, depending on what your plan is. Maybe you're going to live there a couple years, come back to the US, use your Roths. You don't have to liquidate them while you're there. I mean, depending on your situation, if all you have is Roths, maybe you do. But you could, if you come back, use them before you go, use them, distribute them. Depending on how long you've had them there, you may be tax exempt in the US and not have an issue. But it is something to plan around. Social Security, Mexico exempts from taxes. Spain, it taxes it. So, yeah, just be aware. Those are our issues. Inheritance and gifts. In the US, there's this big exemption. You're probably not paying estate taxes if you're a US citizen, unless you have more than $15 million. And if there's a couple, you can file to make sure it's 30 million, double that. So for most of us, we don't have a fear of bumping into estate taxes in the US. In Spain, the heirs, the recipients, pay the tax, and it can be pretty high. And they do have regional differences. So Andalusia and Madrid tend to be favored tax-wise that could be a consideration as you're moving. Mexico, they don't have a gift or inheritance tax, so you can move money all you want and not worry there. Wealth tax, Spain does have a wealth tax. They do exempt a primary residence, but if you do have over 700,000 euros in your worldwide assets, you could be paying a hefty tax, and that is location specific. So Madrid doesn't, Andalusia doesn't, but and it'll vary from place to place. But that could be a consideration if you're looking at Malaga versus Barcelona or something. That could be an issue you want to consider. Yeah, no wealth tax in Mexico or the US. And then I think this is a big change. Just trying to avoid it. I've heard people who don't pay US taxes because they think it's exempt. They don't pay foreign taxes because it's US sourced money, so they don't think they need to. Well, there's a lot of reporting now back and forth. Foreign banks in Spain and Mexico are reporting to the US. There's swaps of data. Mexico's SAT is available for the US. And then Spain has some good reporting. So if you're trying to get citizenship or if you're trying to get permanent residency or you're dealing with the government at all, it may come catch up to you at some time. If you're falling behind in the US, you can file 3 years of back tax returns. If you've forgotten to declare your Mexican earned income on your US return, you can catch up. Those FBARs, the $10,000 or more that have pretty strict, 50% penalties, you can file up to 6 years back if you forgot to report them. Yeah, just don't knowingly avoid, or that gets even worse. And it's best to contact, the IRS yourself than have them coming to you. So there are ways to put that, to make up for it if you weren't aware of the rules. So you never stop filing US returns. You're just filing forever, as long as you're a US citizen. Doesn't matter if you become an EU resident, a Mexican citizen, you are filing US returns. Figure out if you need to file. So again, Spain counts the days. Mexico looks to see if that's your home in the center of your economic life. And then you can determine if you're filing. Spain does have a higher tax. There are some helpful measures. I mean, the Beckham can help when you're there initially if it's Spanish income. I mean, a lot of our clients have US income and live over there, so it doesn't apply. Wealth tax, just be aware of. Yeah, Roths, inheritance, just be aware of those and plan accordingly. Mexico has lower rates, but you hit their maximum or you hit higher levels very fast. So for most of our moderate income clients, it is the controlling tax brackets or tax country. Just avoiding out of ignorance or trying to skirt taxes. I mean, people do that in the US all the time too. They don't pay their US taxes and hope it doesn't come back to them. I'd recommend filing. It's a digital world. They can track, where you're crossing, when you're crossing, where you are. I think just trying to avoid it and pleading ignorance is not a great strategy. But you can strategize as far as don't make Mexico your center of, vital interest. Keep a house in the US, spend most of your time in the US. In Spain, it's a numbers game. If you're there less than 183 days a year, then don't worry about it. You're not a Spanish tax resident. So the big thing here is plan before you go. There's a lot of other rules. We're just talking about Spain and Mexico, wherever you're looking at moving. Investigate the rules, investigate what you're going to be faced with, and you may want to take action before you make the move. Like I said, I mean, it may make sense to take some out of Roths. It may make sense, depending on your plan, your types of accounts, where your income's coming from. There's a lot of differences, but plan ahead and know what you're up for. And maybe it's worth it. I mean, you can live in another country and maybe you're paying more in taxes, but you enjoy the lifestyle, you're saving in other areas, whether it's healthcare or college tuition or whatever the trade-offs are. I'm not saying it's not worth it. Just be aware, be planned for it, know what you're getting into, and just avoid some simple mistakes. All right, we're AIO Financial. We're fee-only financial advisors. We don't sell products. We don't get commissions. We just work for our clients. They're the only ones compensating us. Check us out, AIOfinancial.com. We offer a free upfront meeting. Thank you for watching.